Imagine this. You see a flashy YouTube video telling you, Tesla is going to the moon. Buy now or regret later. You trust the hype. Buy in at $400. And now? Tesla has crashed more than 50% from its peak. Ouch! The worst part? The influencers who told you to buy now are nowhere to be found. And you're left wondering, what just happened? But here's the real question. Could you be the next victim of bad financial advice? Stay with me till the end because I'm going to show you the 3 biggest mistakes young Singapore investors make, and how you can avoid them so that you don't fall into the same trap. And if you want more smart money tips to build your wealth the right way, smash that like button and subscribe to Wealth for You so you don't get fooled by hype investing ever again. Segment 1. The hard truth. Tesla has been on a massive losing streak. It has dropped over 50% since December, and some experts believe it could crash to $100 or even lower. But how did we get here? Well, many young investors blindly trusted influencers who hyped up Tesla without understanding its fundamentals. And that's where everything went wrong. Here are the 3 biggest investing mistakes you must avoid if you want to build real wealth. Mistake number 1. Trusting social media hype blindly. In the past few years, Tesla was the most hyped stock on social media. Influencers kept saying, Tesla will hit $5,000 per share. Tesla is not just a car company, but a tech giant. Tesla's self-driving cars will change the world. Sounds exciting, right? But here's the truth. Most of these influencers didn't even analyze Tesla's financials. And when reality hit, Tesla's stock collapsed because 1. Overvaluation. Tesla was trading at 100 times earnings, way too high. 2. Declining sales. Tesla's sales are dropping in the US and Europe. 3. Stronger competition. Chinese EV companies like BYD and XPeng are dominating with cheaper, better cars. 4. Brand damage. Elon Musk's controversies are pushing customers away. Never trust an investment just because someone on TikTok or YouTube says so. Do your own research. Mistake number 2. Not doing your own research. If you want to build real wealth, you cannot just follow online stock tips. You need to learn how to analyze a company properly. Here's how smart investors do it. Check financials. Look at revenue, profit, and valuation, like PE ratio, debt levels. Understand the business model. How does Tesla actually make money? Is it sustainable? Look at competition. Are there stronger rivals like BYD or XPeng? Think long-term. Can Tesla survive and grow over the next 10 to 20 years? If Tesla investors had done this, they would have seen the warning signs before the crash. If you can't explain why you're buying a stock without mentioning hype, you're not investing, you're gambling. Mistake number 3. Investing like a gambler. FOMO and leverage. Many Tesla investors bought in due to FOMO or fear of missing out. They saw influencers hyping up Tesla and rushed in without thinking. Some even used leverage, borrowing money to buy Tesla shares. Now that Tesla is crashing, these investors are losing everything. Investing is not a casino. Never chase stocks because of FOMO. And never use leverage unless you truly understand the risks. Segment 2. How young Singapore investors can win. If you want to grow your wealth, stop chasing hype and start building real investing skills. Investing isn't about luck. It's about knowledge, patience, and smart decisions. Here's how to do it the right way. Segment 3. Learn financial literacy. Know what you're buying. Before investing in any stock, understand the basics. PE ratio tells you if a stock is overpriced or underpriced. Balance sheet shows how much debt versus cash a company has. Cash flow tells you if the company is actually making money or just burning cash. Smart investors don't guess. They read financial reports and analyze numbers before making decisions. Segment 4. Start with ETFs. Reduce risk and build a strong foundation. Jumping into individual stocks without experience is risky. Instead, start with ETFs or exchange-traded funds, which give you exposure to multiple companies at once. S&P 500 ETF. Invest in top U.S. companies like Apple, Microsoft, and Google. STI ETF, the Singapore Index. Own DBS, OCBC, and Singtel with one investment. China Tech ETF. Gain exposure to Alibaba, Tencent, and Meituan without betting on a single stock. ETFs help you diversify, lower risk, and grow wealth steadily over time. Once you're confident, you can start picking individual stocks. Segment 5. Follow credible sources. Don't trust social media hype. Most finance YouTubers and TikTok influencers make money from clicks, not investing. Instead, rely on 1. Company annual reports, the most accurate source of financial data. 2. Industry research, reports from Morningstar, Bloomberg, and DBS Research. 3. Proven investors, learn from Warren Buffett, Charlie Munger, and experienced Singapore investors. Lastly, investment books. Read classics like The Intelligent Investor to understand real investing strategies. If someone is telling you a stock is going to the moon, they're trying to sell you a dream, not financial wisdom. Segment 6. Think long-term. Wealth isn't built overnight. Investing isn't about quick wins, it's about steady, long-term growth. Warren Buffett started at age 11 and became a billionaire through patience. If you invested $10,000 in the S&P 500 in year 2000, it would be worth $50,000 or more today. The best Singaporean investors hold quality stocks for 5 to 10 years, not a few months. The secret to wealth? Let compounding do the work. Start early, stay patient, and reinvest your profits. Final thought. Invest smart, not fast. Want to be a successful investor? Follow these rules. Learn financial literacy. Know what you're buying. Start with ETFs. Build a strong foundation. Follow credible sources, not hype influencers. Invest long-term. Let compounding grow your wealth. If you found this useful, smash that like button, subscribe to WealthForYou, and hit the bell icon so you never fall for bad investing advice again. See you in the next video. Invest smart, grow rich.